Have you ever wondered how some investors find those rare, life-changing stocks? You know, the ones that return 10, 50, or even 100 times their investment? It can feel a little bit like magic, but what if I told you there was a repeatable process behind it? Okay, let's dive into this, because today we're going to break down the investment framework of Sonia Milani, an investor who's built an entire philosophy around this exact question. This right here is the core idea of the entire strategy. You see, you can't possibly see the full path to a 100x return on day one. It's just impossible. But a solid process, well, that gives you a torch. It lets you see just far enough ahead to take the next step, and then the next one, letting you move confidently through all that uncertainty. So here's our roadmap. We're going to start with the foundation, the mindset. Then we'll get into the tactical stuff, the 4-bucket framework for finding ideas. After that, we'll talk about how to filter for the absolute best opportunities. And finally, we'll tackle what is maybe the hardest part of all, knowing when it's time to sell. Let's start with the most critical piece of the puzzle. You know, before you even look at a stock chart or a financial statement, it all begins with a disciplined mindset. The whole idea here is that phenomenal returns are just a byproduct of a structured process, not a series of lucky guesses.
And this slide just lays it out perfectly, doesn't it? On one side, you have the total chaos of random stock picking. You're reacting to news, hot tips, and that dreaded fear of missing out. But on the other side, you have a disciplined process. This is what turns speculation into an actual business. It's all about having a routine and a repeatable edge that you can count on year after year.
And this quote just brilliantly illustrates the psychology. Look, the goal isn't to be right on every single trade. I mean, come on, that's impossible. The real goal is to follow your process without fail. Losses, they're just a cost of doing business. But breaking your discipline, that's the real failure, because that discipline is what generates the returns in the first place.
Okay, so we've got the mindset locked in. Now, how do we actually find these potential winners from the thousands of stocks out there? Well, this is where the 4-bucket framework comes into play. Think of this as your personal radar system, designed to scan the market and bring only the most promising ideas right to your attention.
These are the 4 places where every single idea comes from. So instead of searching randomly, the process always starts here. Number 1, stocks hitting new 52-week highs. 2, stocks with unusually high trading volume, what we call volume buzzers. 3, newly listed IPOs that are showing real strength. And 4, companies posting exceptionally strong financial results. Everything has to start by falling into one of these 4 buckets.
So, what do all 4 of these buckets have in common? What's the secret sauce? It's one word: strength. This is so important. This is a growth and momentum strategy. We are not trying to find some beaten-down value stock at the bottom. No, the goal is to find companies that the market is already rewarding, companies that are showing leadership and powerful momentum right now. Okay, so the 4 buckets are going to start filling up with ideas, especially in a good market. But we don't want to own them all, right? We only want the absolute best. So this next step is all about filtering that list down to find the true gems, the ones with the highest potential for those explosive moves. It's the key question, isn't it? Having too many ideas can be just as paralyzing as having none at all. So if your radar is full of stocks showing all this strength, what's the single most important filter you can apply? And here is the answer. It's so simple, but so profound. It's not just about owning great companies, it's about owning them during their best times. You see, a fantastic company that's just kind of stagnating is actually a poor investment. The real magic happens when you combine a great business with a period of absolutely explosive growth. Oh man, this slide is just so powerful. Just look at these past market leaders. During their best times, the returns were, well, they were astronomical. Avani Feeds delivered a 70x return while its sales and margins just exploded. But then look what happened after that growth phase ended. Crushing drawdowns. We're talking huge drops from their peak and years of going nowhere. It's the exact same story for Hegg and Laura's Labs. The best times, that's everything. So how do we actually define these best times in a concrete way? We are looking for super high growth. Specifically, we want companies whose sales or profits are growing in the 40 to 100% year-over-year range. This is the jet fuel that powers these multi-bagger moves. Forget 10 or 15% growth. We're hunting for the absolute outliers. All right, so we've found them, we've selected them, but now comes the hardest part: the art of selling. As those case studies just showed us, knowing when to get out is every bit as critical as knowing when to get in.
All those incredible gains can just vanish if you don't have a plan to protect them.
Let's really look at the anatomy of a top using HEG as our example. In Q1 and Q2, the results are fantastic, the stock is flying high. Then in Q3, the company reports its best quarter ever. But look at the chart. The stock had already peaked and fallen 20%. The market sniffed out the slowdown before it was even official. By the time the bad news was confirmed in Q4, the stock was already down 65%.
So, the crucial takeaway is this. The market is a forward-looking machine. It does not wait for bad news, it anticipates it. The stock price often peaks while the news is still overwhelmingly positive, right as the rate of growth begins to slow down. That is the signal you absolutely cannot ignore.
And if you need a reminder of just how high the stakes are, here it is. This is investor Mark Minervini's 50-80 rule, and it is profound. Even your biggest winners can become your biggest losers if you don't have an exit strategy. After a major run, an elite stock has an 80% chance of getting cut in half. Just think about that. Holding on and hoping is not a strategy. You must have a selling discipline. Okay, let's bring it all together. First, build a process and stick to it religiously. Turn your speculation into a business. Second, use the 4 buckets to find stocks that are already showing market leadership and strength. Third, filter for the absolute best by focusing on companies in their best times, that super high growth phase of 40% or more. And finally, sell the slowdown. Protect your gains by getting out when that explosive growth begins to decelerate, because the market is not going to wait for you.
So, we've just walked through the entire framework, from mindset all the way to execution. The knowledge is one thing, but the process, well, the process is everything. So the question I want to leave you with is this. What is the one small, repeatable action you can start doing today to begin building your own disciplined process?